Hi everybody, this is Bob Iacchino from Path Trading Partners along with my co-founder Mike Arnold. We're here to do a three-part series on trend lines for cryptocurrency traders. We've titled this Trend Lines for Trading Cryptocurrencies and Traditional Markets because that's exactly what it is. Trend lines are something that people draw on their screens all the time. They look at them, but they're not really sure how to use them. So we're going to start off by explaining what trend lines are, the functions they have, how traditional trend lines are drawn, and then how we use them and draw them. And again, we're going to do a 30,000 foot instructional video view of trend lines so that you get a basic idea of what we're talking about in our crypto educational updates. So part one, traditional trend lines. Traditional trend lines naturally show a trend. That's what a trend line is. It's a line that's kind of guiding you along a current trend. If the market's going to continue its trend, the trend line should provide support or resistance to keep the trend going. So if it's an upward sloping trend line, that trend line should provide support as the market pulls back and ebbs and flows like it always does. If it's a downward sloping trend line, it should give resistance in the same fashion. An upward sloping trend line can provide support for a bullish market, and a downward sloping trend line can provide resistance for a bearish market. So here is an image of an actual market, and this is an upward sloping trend line providing support. You can see the trend line drawn from this low here to this defining point, and I'll go into what that is in a minute. And then you see the market ebbs and flows as markets do, and it comes down here, and the trend line provides support. The market hits a level and goes back up. And you see other areas of support being shown, but here again, as we get to the trend line, it gives you kind of an eye level of where support may occur. These other support levels that showed the market stopping and rallying back up definitely were drawing support for something else, but you as a trader watching the trend line could say, okay, if it pulls back to the trend line and the trend line is valid, it should provide support, and this particular one does. Here's an image of a downward sloping trend line providing resistance. Again, you have a trend line drawn from an initiating point to a defining point, and the trend gets more extreme during parts of this market move, but then sure enough, as it pulls back to the original trend line that was drawn, you have resistance and the market continues its down move after hitting that resistance. That's kind of the point of these trend lines. You'll generally see two types of lines drawn on a chart. One is a trend line and another is a target line. So let's talk about the difference between a trend line and a target line. Trend lines provide possible support and resistance that would enable a trend to continue. A target line, however, is just a potential target area where the current trend might form another swing. The combination of trend lines and target lines form a number of traditional chart patterns like channels and flags. So let's take a look at what we're talking about. Here we have an upward sloping lower trend line, and this is a potential traditional trend line connecting major swing lows and being upward sloping. So if this market were to pull back, we would expect this line to provide some measure of support to the market. Up above that is a parallel line drawn, and again, it's parallel to the traditional trend line you see below. And this is what we would call a target line. So when the market does pull back to a supportive upward sloping trend line, you could reasonably assume that the market is going to move up toward what we call a target line. So the target line in this case connects swing highs, but it's upward sloping in an upward sloping market. That's what makes it a target line. So what happens when a broken trend line occurs on a chart? When a trend line is broken, it can show a possible change in trend. The change in trend does not necessarily mean a trend reversal will take place. A broken trend line could mean a slowing of a trend, so a change in the angle or the steepness of a trend line. It could mean that the market is moving into sideways price action or consolidation. It doesn't automatically mean that an uptrend is now turning into a downtrend or vice versa. So here's an example of breaking a trend line. So here we've got a downward sloping trend line connecting swing highs. All right, you've got an initiating point and a defining point. The market comes up and it gets resistance from its trend line. And then over in this area, it gets resistance again from this trend line. But then up here, we get a break in the trend line. This signifies a possible change in trend. Now, does this mean that we're going into an uptrend? Not necessarily. This trend line could now be redrawn in a line that's flatter, a line that could be drawn sort of along here. It could also mean that the market is just going to move sideways for a while and not be in a trend at all. All this is something that you should notice. It's something that's significant going on within a chart. That's what breaking a trend line is. Let me turn it over to Mike now to talk about drawing traditional trend lines.
Thank you very much, Bob. Drawing traditional trend lines. A traditional trend line is made up of 3 points: the initiating point, the confirming point, and the validating point. The traditional trend line can have more points than the 3, but it has to have at least 3 points. All that is required to draw a traditional trend line is to identify the 3 points and then connect them with a line. The line that connects the 3 points is called the trend line. The trend line does not stop with the 3rd point. Instead, it is drawn into the future. The easiest chart type to draw a trend line on is a line on close chart. So this would mimic a line on close chart, and we have the initiating point, confirming point, validating point. We connect them and extend it into the future. Let's see what it would look like on, for example, a candlestick chart, where instead of you're using a line on close, we're using the candlesticks. So we're going to identify our 3 points: initiating point, confirming point, and the validating point, and they're all connected together. So that was a traditional support trend line. Now let's look at a traditional resistance trend line: initiating point, confirming point, and the validating point, and they're all connected together by this line. Here's an actual one on a candlestick chart. It doesn't matter what market this is. This is just a sample candlestick chart. You see initiating point, confirming point, validating point. You even see more areas that can touch the trend line. It's also best to notice you don't want really back-to-back candles being the confirming and validating point, or the initiating and confirming point. You want to have them spread out a bit in traditional drawing. So we have 1, 2, 3, even though you have a total of 5 candles touching it. Turning it back over to Bob to cover what's some of the more important trend lines to watch for.
Thanks, Mike. So more important trend lines. Higher time frame trend lines are more significant than lower time frame trend lines. You'll find this to be a running theme in our analysis, and it should be a running theme in everyone's. When the time frame chart you're looking at is longer or of a longer duration, the data is more important. For example, a trend line on a daily chart is much more significant than a trend line on a 30-minute chart. The more touches on a trend line, the more important it is. That just makes sense. Again, more data. A trend line on a daily chart, which has been tested 5 times and is held, is more significant than one with only 3 required points for a traditional trend line. So again, like the one Mike just showed you, if it's only got the 3 clear points, that's not going to be as strong of support or resistance as a daily chart trend line that has 5 or 6 touches on it. So if you want to know more about trend lines, we're going to do another video for you guys, but you can also follow us on Twitter at @path_trading, like us on Facebook, or go ahead and visit us at pathtradingpartners.com and sign up for the free stuff that's on there. Also, listen to our podcast, The Money Path. We have a cryptocurrency section on the Money Path podcast, but we also talk about traditional markets. It's always good to immerse yourself in sort of the trading scene, so to speak, as to what's going on in traditional markets. You'll be able to trade and invest in your cryptos better. Check out our blog articles and hit like and subscribe if you like what we're doing. And thanks for watching. Cheers, guys.